Ladies and gentlemen, good day and welcome to Nitin Spinners Limited Q2FY25 earnings conference call hosted by Smiths Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Avnish Chandra from Smiths Limited. Thank you, and over to you, sir.
On behalf of Smiths Limited, I welcome you all to Q2 FY25 earnings conference call of Nitin Spinners Limited. We are pleased to host the top management of the company. Today, we have with us Mr. Dinesh Nolka, Promoter and Managing Director of the company, and Mr. P. Maheshwari, CFO of the company. We will start the call with initial commentary on results, and then we will open the floor for question and answer. Now, I will hand over the call to Mr. P. Maheshwari, CFO of the company. Over to you, Maheshwari, sir.
Thank you, Avnishji. I warm welcome and best wishes for Diwali to all the participants to this Q2 and half-yearly earnings call of Nitin Spinners. I hope all of you had a chance to look at our investor presentation that is uploaded on the company's website as well as stock exchanges. Before our CMD, Sri Dineshji, elaborate on present industry and business scenario, I am giving brief financial highlights for the quarter and half-year ended 30th September 2024. The company has recorded highest ever quarterly revenue of rupees 822.52 crores during the quarter, showing an increase of 11.5% on YOY basis and 2.4% increase on quarter-on-quarter basis. Cumulative revenue for the half year is rupees 1625.49 crores against rupees 1354.51 crores in the first half of previous year, reflecting an increase of 20%. EBITDA for the quarter stood at rupees 115.15 crores as compared to rupees 81.98 crores in Q2 FY24 and rupees 118.80 crores in Q1 FY25. Half-yearly EBITDA for the period is rupees 233.95 crores against rupees 158.08 crores in H1 24, increase of 48%. EBITDA margin for the quarter is 14.0% as against Q2 FY24 margins of 11.12% and Q1 FY25 margins of 14.8%. PAT for the quarter is rupees 42.16 crores against rupees 31.70 crores in Q2 FY24 and rupees 42.12 crores in Q1 FY25. Half-yearly profit after tax is rupees 84.28 crores against rupees 60.60 crores in H1 24, that is an increase of 39%. EPS for the quarter is rupees 750 and half-yearly EPS is 14.99 per share against rupees 10.78 per share in H1 24. As of September 24, the company's debt profile stood at 1180 crores with debt equity ratio of 0.97 as on 30th September against 1.17 on 31st March 2024. That is all from my side. I now request Dineshji to apprise about industry and present business scenario.
Good evening, everybody, and thank you for joining the call. I extend my heartfelt season greeting to all of you on the festive occasions of Diwali and other holidays. As an industry shows sign of stability despite continuing geopolitical challenges in various parts of the globe. So if you see overall, we see that domestic demand has remained relatively stable, although subdued. However, global demand was quite less. The value-added segment, driven by increasing consumer demand for sustainable and specialized textiles, continued to show strong growth potential. And this shift towards high-quality niche products provided a promising opportunity for companies well-positioned to capitalize on these trends. International cotton prices, on the other hand, dropped further, creating still a mismatch in domestic and international cotton prices, impacting the margins in the quarter gone by. Looking ahead, we expect gap between domestic and international prices to narrow down with the arrival of new Indian cottons. Now, coming to the company's performance, the company has shown another quarter of stable performance during the quarter on account of improved utilization of our assets and cost efficiencies. Realizations impacted marginally despite volatile international cotton prices due to company's focus on value-added products. Despite subdued global demand, the company achieved highest ever quarterly exports of 522 crores and highest ever quarterly revenue of 822 crores. In the coming quarters, we hope to improve our position by focusing on optimization of product mix and cost efficiencies. Going forward, our strategic focus will be to drive long-term sustainable growth by increasing the share of value-added products as well as investments in renewable energy and the value stream as well. We are evaluating various scenarios towards the same and will share as and when we come up with a firm plan. That is what at the moment from my side. Let us open the floor for question and answer, and then we can discuss accordingly.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Otswal from Nirmal Bang Securities Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity and decent set of numbers despite the domestic weakness and consumer demand. So my question on first on the domestic demand is, how do you see the demand panning out after the Q2 numbers, especially the festive season? And secondly, what's your comment on the domestic export demand recovery? We are seeing good traction in H1 numbers, but how do you see the second half panning out for us?
First of all, domestic demand has been slightly improving only if we see last 1 or 2 months when it was moving towards the festive season. And we expect that normally in second half always we have better domestic demand due to the seasonal requirements of winter as well as the marriage season which happens. So in the textiles, normally the second half is better than the first half as far as domestic market is concerned. So we expect, and we have, as we are discussing with our customers, we are seeing that there has been a decent retail sales also happened. So there should be a reasonable demand, better than what we had seen in the last 6 months for domestic market. As far as global market is concerned, the demand has been quite subdued because of various geopolitical tensions happening all around us. But we have been able to maintain our momentum by exploring certain new markets as well as penetrating more with our existing customers. We hope to continue the same momentum going forward as well.
Okay. And sir, this political regime change in Bangladesh, how has been the impact on our business in the short term, and do you see the medium to long term material demand of cotton coming to India, and we as a fabric supplier can participate that thing? So how do you see the medium term opportunities of this geopolitical thing from Bangladesh, Bangladesh basically.
Means, there was a very small time frame when there was a disruption. Maybe the transition from the last government to the new government was pretty smooth, I must say, and it happened within a period of 5-7 days. So it did not affect us for the yarn business at least. So it was quite smooth transition which has happened. But there has been issues, small issues cropping up, and during last 3-4 months we have seen. So that's why we feel that now the customers are looking towards the newer markets as well, newer suppliers as well. So in that scenario, definitely most of the brands are also looking at India. We have seen that our customers in India who are into the export businesses have seen a good demand of garments. But our garment capacity has a limitation to export to export, or maybe they are catering more towards domestic market than towards the export market. So there is a limited scope of improvement on that side. Yes, definitely as a fabric supplier, we will have an advantage in the domestic market to sell more to our existing customers and exporters as well.
And lastly, sir, we were anticipating the next phase of growth plan announcement in the after Q2 earnings. So, what is your strategic plan? Whether we want to further see the demand to pay for firmness, then we announce that thing, or what is our position on that front?
Basically, definitely, we will be going in for the expansion of our capacities. We are just slightly cautious on what are the products where we want to invest in. The capital allocation needs to be done very judiciously in such trying times when we are seeing the disruptions coming every year and on. So we need to get into the products where we see long-term strategically something which we can continue to grow and have better margins. So we are in that process at this point of time. We are deeply studying various avenues which are available to us, and we are firming up our plans as well regarding the capacities, also regarding the products which we want to get in. So we could not complete the whole exercise as such. So that's why it is taking slightly more time, but we will let you all know about it very shortly.
Surely, so we will be waiting for that. And last, what's your view on the overall raw cost, cotton price outlook for medium to short to medium from my side?
First of all, cotton prices in India, the season started with the announcement that last year the crop was much more than what was announced at the beginning of the season. So cotton prices accordingly in India came down very much near to the MSP levels itself. So at the moment, cotton prices are ruling near to the MSP levels, not too far off from there, and we do not expect it to go down any further, maybe 3-4%, where the MSP will hit us at about 52 to 53,000 rupees a candy. So that is the lowest level we are expecting, and we expect that on the upside also we do not see too much traction because a lot of cotton internationally is available, and still from the international prices we have a disparity. Indian cotton is trading at about around 14-15% premium over the New York futures, where it used to be around 5% earlier. So this disparity is still there, and we think because of the availability of the cotton in the world, Brazil is producing one of its largest crop. Even US is coming out with a very decent crop. So looking into that and lower demand in the international market, we feel that the prices should remain in this region only of which is prevailing at the moment in the international market of about 70 cents per pound.
Sure, sir. Thank you for answering patiently all my questions, and all the best for the second half. Thank you.
Thank you. The next question is from the line of Vikram Villa Suryavanshi from PhillipCapital India Private Limited. Please go ahead.
Yeah, good evening, sir. So how is the industry capacity utilization for spindle and how much spindle addition we are expecting going forward?
Sir, at this point of time, we have in all about 54 million spindles working in India, means installed in India. I think out of that, around 10% has been redundant and not operating only. So we are left with about 48.5. And then the spinning capacities are being utilized to the range of about 85 to 90%. This has been constant for last 2-3 months that we are seeing utilization. So overall, if you see from the installed capacity, the utilization is in the range of about 75 to 80%, whereas operating wise, you can see around 85 to 90.
Got it. And in terms of our fabric capacity, now we're coming close to full utilization, not exactly, but at least we are approaching that. So, are we seeing any opportunities for capacity addition at fabric?
Definitely, we are also looking at that particular avenue as well. So we are working out various products which we need to cater. It is not only the fabric capacity, we need to also look at the kind of products which we need to do. The improvements in the product profile and other things also we are looking at. So definitely that is definitely going to be a part of our growth strategy as well.
And out of total fabric, how much broadly would be exporting?
We are exporting in the region of about 18%, 17-18% we are exporting directly. Rest is being given to the exporters in the country itself, who in turn export the garments.
Okay. So I think that is the area where probably we can see good opportunities going forward as a fabric compared to yarn.
Looks like that.
Yeah. And knitting somehow still there is improvement from low base, but is there any structural issue from knitting fabric side where we are not seeing good amount of traction or utilization of the capacities?
In the case of knitting, what we have observed is of late the value addition has been going down substantially, and we have a minimum benchmark of value addition which we have kept. So because of that, we are not able to increase our utilization level. If you want to sell and utilize, we can easily reach about 75 to 80% of our capacity. But there is a minimum threshold benchmark of contribution which we have kept for this particular business. And as such, anyhow, we also have to compare how our yarn is, whether if we are able to sell our yarns in a better manner than the knitted fabrics. That proportion also we need to look at. So considering that, we are, of course, knitted fabric. If you see overall from the knitted fabric business point of view, there has been a good demand of the knitted fabric. If you see about 6 months back, the demand of knitted fabric was quite low. If you see now the numbers of our customers as well, and you see the various demands coming in, knitted is improving substantially. So from that point of view, utilization is possible, but margins have still not come there. So that is one of the reasons why we are trying to keep it in a controlled manner.
Got it. And last question from my side about out of total cotton we use on a year, broadly how much is imported percentage wise broadly?
It depends on year to year. We keep on importing various kinds of cotton which as per the requirement of our customers. So last year, the year which we are running into at this point of time, it has substantially increased because of the cost economics part. So in last 6 months, our utilization of imported cotton exceeded more than 25%. So this may still continue going forward, looking to the prices which is there.
Okay, but for our export, we must be importing again advance license, which could be helpful looking at the lower international prices.
Yes, definitely, we are doing that as well.
Okay, so largely export is coming from that, or is even we can still make money from domestic cotton and exporting it?
No, we are not 100% exports is not going from that. It is about our exports of yarn is about nearly 55% of our capacity, whereas as I told just now, imports is about 25% only. So we are also selling from the domestic cotton as well.
Got it. But does it make sense when you are getting 10-15% lower price for international cotton, or you think transportation is something which is making difference?
The landed cost, this is these are what we had talked about in my earlier comment was the ex-Gen prices, ex-Gen US or ex-Gen India. There we have a disparity, but when we compare the landed costs, Indian cotton in the last quarter it was expensive by about 5 to 7% in comparison to the imported cottons. But there is a time lag by which the cotton can come in and we can utilize it. So that is one of the hindrance. Here at this point of time, more or less Indian cottons on a net clean cotton cost basis is more or less at parity with the international cottons. So more or less they have come at parity. So then we have to again weigh what is the future and how we have to go ahead on that part. So we are increasing or utilizing according to the requirement of the customers as well as our logistics as well.
Understood, sir. Thank you very much.
Thank you. The next question is from the line of Tamil from Tamil Investments Limited. Please go ahead. Mr. Tamil, your line has been unmuted. Please go ahead with your question. Mr. Tamil, your line has been unmuted. Please go ahead with your question. As there are no response from the current participants, we'll move on to the next participant. But before that, ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sukhbir Singh from Grow Value Capital. Please go ahead.
Good evening and thank you for the opportunity, sir. My first question is what is the inventory level held by the retailers? Have they held it due to demand impacted in the domestic market? Or what is the current inventory levels they have currently?
I will not, since we are not directly dealing with the retailers, I will not be able to exactly highlight the level of inventories which they have. But as we discuss with the industry sources, we are understanding that they are coming down substantially in the last post the festive season. There has been a good sale, so the inventory levels have reduced substantially. How much it is, what is the quantity, I will not be able to quantify exactly.
Okay, sir. So my second question is any plan for technical textiles or garment segment or any new segment in the near future?
At the moment, not in the technical textiles. We, of course, some of the technical nature of the fabrics which can be produced in our existing spinning system and the weaving systems, we are definitely looking at those areas. Definitely that is under our consideration, but not specifically any new systems on which we can do technical textiles. Of course, garmenting is something which we keep on looking. And with the avenues which is developing at this moment and the development which has happened in Bangladesh and also in other countries, so we are definitely looking at that avenue. And the kind of demand which is getting generated is also, we are looking at those areas as well.
Okay, sir. So my next question is considering Bangladesh issues currently, so what are the new strategies for export market in, can you please explain in brief which countries are aiming to capture it, you are aiming to capture its market share?
Actually, we are present all around the globe already. We need to only shift our preferences, and those preferences are dependent on many factors such as the logistics cost which is involved, our competitors' cost in comparison. So we need to factor in all those things. If we consider them today, Bangladesh is still the best bet. Bangladesh and maybe Sri Lanka are the two countries which are still the best bet because they are very near to us. Logistic cost is also very, very less. And looking into the nature of the retailers, international retailers who wants very, very fast turnaround, it suits them as well as to us. So we have to, at this point of time, we have to focus on such markets where we can deliver faster at lesser costs. That is the strategy. So you have to be in those markets at the moment. Yes, as and as we feel that if the geopolitical tensions die down, our existing markets in other continents as well will come back to us, and we keep on knocking the doors so that we can build upon our existing relationship which is already there. And I do not see too much downturn in the Bangladesh. Yes, the growth may not be there in Bangladesh going forward so much, but I do not see that they going out of business or their business going away very in short term.
Okay, sir. Okay, sir. Thank you so much, sir. I'll rejoin with you. Thank you so much.
Thank you. The next question is from the line of Roshan from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to understand how are the freight costs panning out now?
Freight cost, if we compare with the if we divide this freight cost today in four parts, like first quarter, second, and third, and then now. So the peak freight cost was in the second quarter. Q2 was the of this calendar year. I must say from April to June was the peak freight cost. Then slightly from the July onwards, the freight costs have come down. But now at this point of time, they are still higher than our first quarter. So all in all, the freight cost is coming down. The pain which was there in around June, July is subsided substantially, and we expect that the normal kind of rates will be there in another month or so.
Okay, that was helpful. And given that this scenario continues regarding the freight, so what would be the ideal EBITDA margins that we should be looking at going forward, the broader range?
Of course, the freight does not decide our EBITDA margins because freight is only a small component of it. We have various other factors also involved, like the raw materials. We would wish to have better EBITDA margins than what we are running at. If you see our last 3 quarters, we are running at near to a similar kind of EBITDA, about in the range of about 14 to 15% is the EBITDA range which we have been there. So definitely we are looking forward to improve this going forward. Normally second half is better, so we expect it to improve going forward as well. But a lot of it depends on the cotton prices and the demand which is coming there. On the demand side, we are not seeing that much traction in the international market as we would expect it to. So that is one of the major reasons for lower margins at the moment.
Okay, thank you so much. That's all from me.
Thank you. The next question is from the line of Raman from Sequent Investments. Please go ahead.
Hello.
Yes.
Sir, I have just 2 questions. I just want to know what's the gross margin from yarn as well as fabric business, and what is the current spread between yarn and cotton?
What was your first question? Can you please repeat it?
Gross margin of yarn and fabric business.
Normally means gross margin, if you see, overall gross margin, I think is in the range of about 38% on a totality basis. If you see, Maheshwarji, am I right? Can you check the numbers exactly?
For this quarter, it is 36%.
36%. So that is the gross margin on a blended basis for us. Definitely, since the yarn is made out of our in our itself process, so the fabric gross margins are definitely much better than this. So on an average basis, they should be in the range of about 50% level. And rest will be on the yarn basis, it should be around 33 to 34%. Now coming to your second question of, can you repeat the question? Second question, please.
Sir, what's the cotton yarn spread? Yarn cotton spread.
Yeah, cotton to yarn spread is as of today is in the range of about, basic cotton to yarn is in the range of about 90 rupees a kg.
90 per kg.
Yeah.
Sir, will there be any reduction in the gross debt going forward?
Yes, definitely it is reducing only. As
Is there
you
any
can see, our
particular this thing, so with respect to 25?
pardon, with respect to
The final year 25.
yeah, it is further going to go down. We have repayments of nearly 90 to 100 crores going in next 6 months, so that should be there. So another 100 crores should be paid down. We are at this point of time, our gross debt, as you must have seen our balance sheet, is about 111,
Yes.
180 crores, inclusive of our working capital as long-term debt, and this should come down by another 50 crores or so, in considering that working capital may increase slightly, and the repayments will be of 90 crores will be done in the next 2 quarters.
Sir, and one last question. Can you give any volume guidance or revenue guidance with respect to FY25?
Basically, volume guidance is like we are now running at near to the top capacity in our spinning, so you can accordingly extrapolate. We are near to the top level. So in the fabric business also, we are just reaching we are very near to our top capacity. So it is also running on that side. And knitted fabric business, we expect to improve, but that does not materially impact our overall revenues. And on the revenue side, I think we should be able to maintain this run rate of more than 800 crores going forward as well. So
800 crores, right?
Yeah.
In the remaining 2 quarters.
Yeah, remaining 2 quarters.
Okay. Thank you, sir.
Thank you. The next question is from the line of Aditya from Savilo Investment Managers. Please go ahead.
Yeah, thank you for the opportunity. I have 2 questions. One is, can you give me the split in your export business? I want to know how much is the revenues, especially from North America.
From revenues from the
North America.
North America, I think of our export sales, we are doing about 7 to 8% in that market.
7 to 8%. Okay. And my next question is we all know that Trump has won the election. So, and he has proposed across the board tariffs, at least in his campaign speeches, of about 10 to 20% on everything else coming from any country apart from China. China is much higher. So in case, say, some kind of tariffs do come in place, 2 questions. So one is what kind of tariffs do you expect may come in place? Second thing is, what kind of steps that are possible for us to take as a company so that we can mitigate any effect of any proposed tariff?
First of all, already from India, we have higher tariffs in comparison to other competitors. So, likes of Pakistan, likes of Bangladesh, which is there, and also more or less equal to what China is having. China is having the majority of share of the textile exports. Nearly, if you see the total textile exports happening in that market, India is having only, if you total up everything, including yarns, fabrics, made-ups, home textiles, everything, our exports are nearly 12 to 15% of what they are importing. And China constitutes more than 50%. Any steep tariff on China will definitely help us grow our business. It is for the American people to pay this higher taxes. They will be paying, if everything is expensive, one is expensive by 50%, another one is expensive by 10%, definitely we will have better competitive advantage. So as far as the tariff goes, if that is implemented, I think India will definitely have an edge. I don't see as such, already since our tariffs are higher than what it should be in that market, GST benefits have already been withdrawn in the last Trump presidency. So I do not expect any major tariffs coming us, at least on the textile side.
Aditya, I hope this answers your question. Thank you. The next question is from the line of Vikram Vilasuriyavanshi from PhillipCapital India Private Limited. Please go ahead.
Yeah, I think most of the questions answered, but just looking at the scenario where we are seeing correction in polyester prices linked with the crude. So does it impact pricing for cotton yarn also, or you think it's not much material impact?
Definitely, first of all, we need to look at the polyester with the cotton. So whenever the polyester, just crude has come down and it is putting pressures on the polyester fiber. And polyester fiber being an alternate fiber to cotton definitely impacts the pricing of the raw cotton also. And that is why we are seeing a lot of the prices which has come down substantially in the raw cotton also. The raw cotton prices has been moving in this lower range of about 70 cents per pound internationally, as well as in India in a lower band of about near to MSP because of this pressure created by the polyester. So definitely that has an impact on the raw material side. As far as yarn goes, in the lower end products or where there is a fungibility available to change the products from cotton to the blends, yes, definitely that is happening because of lower polyester prices. But vis-a-vis that, we are also seeing the cotton prices also coming down. So at the moment, we do not see too much impact on the cotton consumption side. Yes, it has impacted us in the early half of this particular year itself. From January to June, this was one of the scenarios.
Understood. And in terms of cotton purchase, given the volatility and uncertainty, what would be our strategy in terms of cotton purchase? We'll like to hold if it is close to MSP in larger quantity or like on a regular basis?
We have been, it is our stated policy that we follow a normal, as per our market, as per our exports, or as per our order book. Excuse me. As per our order book, we are holding the cotton. So accordingly, we are not going for any major stocking kind of thing. If we get the orders at this price level, definitely we will stock it up accordingly.
Understood. And last one, what would be share of our blend yarn out of overall yarn sale?
Blended has now reached nearly out of our total production at this point of time. Blended yarn has reached about 17-18% of our total capacity.
And is that a broadly peak for us, or we have further room to, depending on the market situation, to expand?
We can increase this capacity depending on the market. Some of our mills are capable to change from cotton towards polyester cotton. So at the moment, the dedicated capacity which has been done for blends is only running at the moment on that.
Okay. So, but when you say blend, it is like a PC or PV, or is it like a polyester viscose also?
Yeah, it is polyester viscose as well as polyester cotton as well as viscose as well. So we can do various kinds of 100% man-made also. We can do also on the blends also, and blending of various man-made also.
Understood. Thank you and all the best, sir.
Thank you.
Thank you. The next follow-up question is from the line of Aditya from Sowilo Investment Managers. Please go ahead.
Yeah, thank you. I'm sorry, my phone got on mute the last time. So so my question follow-up was that when you say that you gave this metric, right, that 50% is from China, and if they have like 50% tariffs, then we'll be more competitive. So I just wanted to understand: will we be more competitive just based on the price differential, or is there any other steps we can also do to be competitive?
At this point of time, if you see our industry, we have various disadvantages. Like we have higher raw material prices vis-a-vis international parity. It is just because of our cost efficiencies in the various, especially in the spinning side, we are able to compete internationally and still have a major market.
Mm-hmm.
Ladies and gentlemen, we have lost the management line connection. Please stay connected while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently holding. We have the management line back on the call.
Yeah. So I think we were discussing about the competitiveness of our industry.
Yeah.
So definitely Indian industry is competitive. We have certain disadvantages in terms of our export, basically our import parities. Our imports are expensive. Our raw materials are expensive in compared to our competitors like polyester, viscose, as well as cotton. Today is expensive than the international market. We are quite expensive. So we feel particularly that definitely going forward, our competitiveness will be improved if we have a better tariff regime going with us.
Okay. And last question, I'm sorry, you may have answered this already in the call. What is the reason for margin compression quarter-on-quarter?
Basically, our raw material prices, we had a disparity in the raw material prices. Particularly, if you see in last 3 months, the disparity went up to a level of about Indian cotton prices were expensive than the international market by nearly 18-20% also during the quarter. And yarn prices came down, but Indian cotton prices remained at the same level. And internationally, since we have a major share of exports, so that reduced our margin, gross margin.
So there's no means to hedge for that volatility?
We are importing cotton. That helps us in reducing that volatility. As I shared in my last, so one of the questions, that we have been increasing our share in imports of cotton. So that helps us in hedging that particular part.
Okay. Okay. Thank you. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Nishit Jain from SNG Investments. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, as you mentioned, the current cotton to yarn spread for this quarter was 91 rupees. So, can we expect this to going forward in H2 to be better?
I told that this is the delta today, not the last quarter.
Okay.
Last quarter was also about 88 rupees, if you see. The raw material prices were, I think, averaging at 165 or 66 rupees. And the yarn prices were in the range of about 260 rupees.
Okay. Thank you.
Thank you. The next question is from the line of Uday Mehra from UK Capital. Please go ahead.
Hello, am I audible?
Yes, you are audible.
Yeah. So, why the value addition is going down in knitted fabric, as you mentioned in the previous questions? Can we have more clarity on that?
Value addition is lesser in the knitted fabric because the process is smaller in comparison to the weaving fabric. I was just comparing the weaving fabric and the knitted fabric side of the business. So the value addition in the knitted fabric is lesser because of the lesser processes involved. So that is why the value addition is comparatively lesser. So it has more impact of raw material prices and raw material costs. Immediate impact is much more. When you have lesser delta, the impact is more. So we need to be very cautious of minimum value addition which we want on that side.
Okay. And so in India, it seems that the cropping season is okay. So the prices are around MSP. Any chance of getting the cotton below the MSP? And given the parity, do we have any plans for importing cotton?
We are importing cotton. Definitely, we are importing cotton, and it is coming in big way in the whole of country, and all the reasonable sized players are importing the cottons already. So that is definitely happening. As far as cotton prices going below MSP, I don't think so. That is, it may happen for a few days, maybe few weeks as such. But normally, the Cotton Corporation of India, the agency appointed by the Government of India, generally steps in whenever the cotton prices, whenever the basic raw kapas prices falls below the MSP levels. So we do not see prices remaining below MSP for a very long time. Again, yes, if they decide to sell as per international parity, then the cotton prices may be available at lesser prices as well. But that is for them to and the government to decide on that particular part. Till date, that has not happened as of yet.
Okay. So what would be the percentage of the cotton imported in the overall inventory levels?
I have said in my last question that it is in the range of about 25% for us in the last 6 months.
Okay. So till the parity issue will not be solved, this will be remain in this same level, right?
Yeah, it may increase as well. So it going forward depends. We can, since we are exporting and we are allowed to import under advanced license, we can increase this as well.
Okay. Thank you, sir. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Sukhbir Singh from Grow Value Capital. Please go ahead.
Thank you, sir, for the opportunity. Sir, my question is related to the power cost savings. So, what are the measures we have taken to save the power cost, and what will be the benefit we will be getting in this financial year and also in FY26?
Measures we are taking, first of all, we are at the moment renewable power, especially the solar power, is quite cheaper. So we have already increased our capacity on the solar power side. Now we have about 18.8 megawatt of solar power already up and running, and we are further adding the capacities on that particular side. This is just about 8 to 9% of our total power requirements. And this may increase going forward as well. So we have the cost of power there is quite cheap. In comparison to our grid cost, it is nearly half. Our grid costs are more than 7 rupees a unit, and that costs about 3 rupees 50 paisa a unit. So as and as that capacity comes up, that will help us in reducing our power cost. And further, we are also discussing with various players to get the solar capacity in the solar parks that will supply us for captive purposes. That will also help us in reducing our power cost. Further, on the side of the consumption, we do keep on having a lot of exercises where we try to improve upon our cost efficiencies and reduce the usage of power in the various processes involved. So both is on one side on the generation and on the consumption side, both sides we are working very aggressively, since this is our biggest cost after the raw materials. So this is something which is a continuous process for us.
Okay, sir. And sir, how much capex we will be incurring for capacity expansion in solar power? Can you please provide any color on it?
At the moment, I will not be able to give you the number, but it will be meaningful. We are looking at various options. If we get into solar park, then we can go for a SPV kind of thing also, where we invest part of the equity and get the power done for us. So that is also in the making. Also, in our own in-house, whatever capacity is available, definitely that is also happening. So I think last year we had spent nearly 20. In the first half itself, again, we have spent 12-13 crore rupees. So the run rate will continue. We will continue to invest in that. But exact number at the moment, I will not be able to give you.
Okay, sir. No, sir. And so my second question is, sorry if I missed earlier your comment on this. What will be the price difference in cotton? For example, for cotton price in Australia, between the Australia and Brazil and Indian cotton prices. We are importing the cotton, so what is the final benefits India is getting, and how much is the difference between the prices, and how it will perform in the near future prices?
Definitely near future means, first of all, the forecasting depends on all these prices, or let it be Australian or Brazilian or US or any other origin. Most of the time that is priced on the basis of the New York futures and a premium on that. At this point of time, if you see the landed cost, especially in India, Australian cotton is the most expensive one, but that has a better yield, better quality, better products being made. So overall, that remains more or less equal to the Indian cottons. So in Indian cottons are second is Indian cottons, which has moved down substantially from what it was about 1.5 months or so in the end of September. From there, it has come down, but still it is expensive. Landed cost, I am talking about the landed cost only. And thirdly, the Brazilian is cheaper, but that has its own disadvantages as well. It is more or less behaving like the in terms of yield, productivity, and others like Indian cotton. So it depends a lot on the type of cotton which you are sourcing and which you are using and the kind of products which you are making. So accordingly, we have to right size our requirements of cotton, and then according to our product, we have to right size the cotton which is being used in sale.
Okay, sir. Thank you so much, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions from the participant, I now hand the conference over to Mr. Avnish Chandra for closing comments. Mr. Avnish?
Yeah, sorry. Thank you, Neha. Dinesh sir, before taking your closing comments, one last question at the expense of repeating on capacity side. You did talk about that you are waiting all your options in terms of product segment and everything. But if you can indicate some ballpark figure, what kind of capex as compared to our earlier capex in terms of size or segment or anything you can indicate, plus when we can expect in terms of tentative timing when we have some new capacity, any ballpark indication will help.
At this point of time, if you see from the point of view of size of the expansion, I will not be able to actually talk about it because we are not formed of the sizes. We are evaluating various options which is available. We have been in spinning and growing consistently our spinning business and achieved a reasonable size and leadership in that. So definitely that is an area where we want to continue. But as we all are seeing that the margins are under pressure, and we are not expecting unless the demand is extraordinary or comes up to the similar level what was there earlier in the international markets, we do not expect the margins to come back. So we have to evaluate our various options while going in for capacity increase in that particular segment, and we need to look at the products where we can have better margins. That is one of the major chunk of the investment which normally used to happen in our last few expansions. So we are still evaluating what kind of capacity we need to increase or whether we should increase or not. That is something which we are evaluating at this point of time. In the fabric business, it has been a relatively new business for us. We have established us in a reasonable manner. And there also we have to look, we are still, in many of the products, we are still not available, especially on the apparel side. So we are evaluating what are the kind of products which we should be in and accordingly increase our capacities in that particular segment. There also the issues going forward will come on the margin side because of the capacities which are up and operating already in the country. So we need to look at all those facts and figures before getting into any capacity. So I will not jump on the exact number which we to you, but definitely as our past history goes, we'll continue to grow from here, and very shortly we'll come up. It will not take much time before we let you know about this. Definitely before this financial year end, definitely will come with something going forward as well.
Okay, sir. Thank you very much, Dinesh sir and Mahesh.
We expect, and further, as you said, as you asked, when do you expect the new capacity? So as you know, the capacities are not too much coming, and the equipments are also easily available. The ramp-up time should also be much lesser than what it was in the past also, if we decide to, whatever capacity we decide to add up on that side.
Okay, sir. Thank you very much for this elaborate answer. So thank you very much, Dinesh sir and Maheshwari sir, for giving us this opportunity to host the call. Before closing, sir, any final commentary from your side?
Definitely, I would like to thank everyone for taking out time for joining the call, the earning call of Nitin Spirits. I hope we have been able to address all the queries. I also want to thank Smith and Avnishji for hosting the call. And for any other further information, you can get in touch with our finance team or our investor relation advisor at GA. Thank you once again for taking the time out, and happy festivities once again to all of you.
Thank you. On behalf of Smiths Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.